10 gemstones expected to outperform gold by 2030. Gold has defined wealth for centuries, but global markets are shifting. While analysts project gold to grow 5 to 7% annually through 2030, a select group of 10 rare gemstones is moving faster, posting returns of 12%, 15%, even 20% per year. These are not ordinary stones. Certified by GIA, SSEF, and Gubelin, they're backed by verifiable scarcity, measurable demand, and record-breaking auction prices. Each asset tells a story where geology meets finance. Private wealth funds, collectors, and institutions across New York, Geneva, and Hong Kong are quietly reshaping portfolios around these stones, not just as jewelry, but as heritage-grade financial instruments. This documentary reveals the data, the market dynamics, and the 10 gemstones positioned to outperform gold by 2030. Don't forget to press and hold that like button, leave a comment, and hit subscribe before we begin. Ranked 10th, Black Opal, Lightning Ridge, Australia. Markets rarely reveal their shifts in real time. While gold continues to dominate headlines, a quieter transformation has been unfolding beneath the surface of the global wealth market. At the center of this shift is a stone found almost exclusively in one remote region of New South Wales, Australia, Black Opal from Lightning Ridge. Geologically, Black Opal belongs to the hydrated silica family, SiO2.NH2O, formed when silica-rich groundwaters seeped into Cretaceous clay layers roughly 110 million years ago. Over time, microscopic spheres of silica settled into highly ordered structures within cavities of ironstone. These perfectly arranged spheres refract incoming light, producing the phenomenon known as play of color, flashes of electric green, violet, crimson, and cobalt blue that appear to move beneath the stone's surface. In Lightning Ridge, these color patterns are exceptionally vivid because the dark ironstone backing amplifies their intensity, creating opals that stand visually apart from those mined anywhere else on Earth. The discovery of Black Opal in the late 1880s quickly transformed Lightning Ridge from an isolated outback settlement into one of the most essential gemstone localities worldwide. By the early 20th century, demand from Europe and the United States surged, with Victorian jewelers incorporating Lightning Ridge opals into bespoke pieces for royal collections and high society commissions. Auction houses like Sotheby's and Christie's still reference historical stones such as the Aurora Australis, an extraordinary 180-carat specimen unearthed in 1938 that fetched over $1 million decades later. Its distinctive harlequin pattern remains a benchmark for collectors and pricing models today. Yet Lightning Ridge is not just famous, it is finite. Geological surveys conducted by the New South Wales Department of Planning and Environment show that economically viable opal-bearing layers have been diminishing steadily for the last 20 years. Where shallow, open-cut methods once dominated, today miners must excavate deeper, often encountering dry clay seams and unstable geology that make extraction increasingly expensive. In parallel, global demand is accelerating, particularly in North America, Europe, and rapidly growing markets in China and Japan. Collectors are competing not only for fine jewelry-grade stones, but also for museum-caliber specimens, pieces with complete spectral flashes, unmatched clarity, and confirmed provenance. As of 2025, high-grade black opals trade in the range of $8,000 to $15,000 per carat, while exceptional stones with uninterrupted full-spectrum color can achieve $30,000 to $35,000 per carat at auction. According to data from the Gemological Institute of America, GIA, and Gemfields Market Reports, Black opal prices have maintained an average compound annual growth rate of 8 to 12% over the past decade. Forecast models project that, if current trends persist, prices could climb at 10 to 14% annually through 2030, comfortably exceeding conservative gold projections, which remain in the 5 to 7% CAGR range. Investment sentiment reflects this shift. Private wealth managers increasingly classify Lightning Ridge black opals as heritage-tier assets, physical stores of value where scarcity is scientifically verifiable, and certification frameworks from institutions like GIA and SSEF support liquidity. For ultra-high net worth buyers, these stones function as portable wealth assets, suitable for long-term preservation while remaining shielded from currency fluctuations in specific capital controls. Meanwhile, growing digital marketplaces and tokenized gemstone platforms are expanding accessibility for mid-tier investors, further driving competition for the best specimens. In a broader sense, black opal represents more than rarity. It reflects how concentrated geological histories intersect with shifting patterns of global wealth. With a single mining region supplying nearly the entire world's high-quality material, a declining production curve, and surging demand from collectors and institutional buyers alike, black opal is increasingly viewed not just as a collector's gemstone, but as a strategic financial asset poised to outperform gold within the next 5 years. Ranked ninth, diamonds. Diamonds enter this list for a reason entirely different from geological rarity. A structural transformation is reshaping their role in global wealth. For decades, diamonds were considered symbols of luxury rather than financial assets. Unlike gold or platinum, they lacked an international pricing index, which made them complex to trade, illiquid, and unpredictable for institutional portfolios. That changed in 2021 when fintech company Diamond Standard introduced the world's first regulated commodity-grade diamond products. By aggregating hundreds of GIA and SSEF certified diamonds into standardized coins and bars, Diamond Standard transformed what used to be individual, unique gems into a fungible investment class backed by verifiable certification and transparent pricing. These assets are tokenized on secure ledgers, audited independently, and traded through regulated exchanges, effectively placing diamonds in the same category as gold ETFs and other globally recognized stores of value. As of 2025, high-grade investment diamonds, stones between 1 and 2 carats, D to F color, IF to VVS clarity, trade at $6,000 to $12,000 per carat, while a Diamond Standard coin containing a balanced mix of certified stones is priced around $5,200, reflecting an 18% year-over-year increase since 2024. At the same time, structural constraints are tightening supply. Reports from De Beers and Rappaport indicate that global rough diamond production is projected to decline by 1 to 2% annually through 2030, mainly due to the exhaustion of significant deposits in Botswana's Jwaneng mine and Russia's Mirny complex. While supply contracts, demand for standardized diamond assets is expanding rapidly. Deloitte projects the market for tokenized diamond investments to reach $5.3 billion by 2030, growing at an estimated 14 to 15% compound annual growth rate, significantly outpacing conservative gold forecasts of 5 to 7% KGR over the same period. Institutional adoption is accelerating. Wealth managers in the US, Europe, and Asia are beginning to allocate up to 5% of alternative portfolios to diamond-backed assets, viewing them as tools for diversification, inflation hedging, and wealth preservation. Unlike traditional jewelry, these investment-grade diamonds are liquid, regulated, and globally tradable, creating opportunities unavailable to investors just a few years ago. In effect, diamonds are shifting from symbols of personal prestige to standardized financial instruments with measurable scarcity and transparent value. With rising institutional participation, declining mine output, and a newly established mechanism for price discovery, diamonds are positioned to deliver returns capable of outperforming gold by 2030. Ranked 8th, Tanzanite, the one-stone monopoly driving prices beyond gold. Tucked into the foothills of northern Tanzania lies a deposit so geologically unique that it has reshaped the global colored gemstone market. Tanzanite, a rare blue-violet variety of the mineral zoisite, forms under extreme conditions where tectonic heat and pressure interact within a narrow corridor of the Marilani Hills. This region, just 8 kilometers long, is the only known source of gem-quality Tanzanite on Earth. According to GIA research, the probability of discovering another deposit with the same geological profile is close to 0, making this stone one of the most geographically constrained assets in the global gemstone trade. Discovered in 1967 and named by Tiffany & Company, Tanzanite's debut was carefully orchestrated for the international luxury market. Within a decade, it appeared in high-end jewelry collections across Europe and the US, setting new benchmarks for pricing and prestige. By the early 2000s, demand surged further as Sotheby's and Christie's began auctioning certified Tanzanites above 5 carats, with premium Etedoria specimens exceeding $10,000 per carat, a remarkable figure for a gemstone only half a century known to the trade. Today, Tanzanite occupies a strategic position in the investment landscape. As of 2025, mid-range stones between 1 and 2 carats are priced from $600 to $1,200 per carat, while premium AMA quality gems above 5 carats command $3,500 to $7,000 per carat. Exceptional stones exhibiting full-spectrum blue-violet saturation achieve auction prices exceeding $10,000 per carat, reflecting their scarcity and collector demand. Yet beneath these rising valuations lies a structural constraint. Government restrictions introduced in 2019 severely limit export volumes and prioritize domestic beneficiation. According to the Tanzanite Foundation, overall production has fallen by over 60% since 2015. The impact of this controlled supply coincides with growing international appetite, particularly from the US, European, and Chinese markets. Gemfield's Market Outlook 2025 projects a compound annual growth rate of 12 to 16% for Tanzanite from 2025 through 2030, a trajectory that could comfortably outpace conservative gold forecasts. With a single locality producing nearly the entire global supply, declining output, and intensifying competition from private collectors and institutional buyers alike, Tanzanite stands as one of the most tightly constrained gemstone assets in existence. Within the next 5 years, it is increasingly viewed not just as a luxury stone, but as a strategic store of value positioned to outperform gold. Ranked 7th, Alexandrite, the shape-shifting gem that's redefining wealth. Few gemstones can alter their identity as dramatically as Alexandrite. Discovered in 1830 in Russia's Ural Mountains, this rare variety of chrysoberyl contains trace amounts of chromium that produce a phenomenon gemologists call the color change effect. Under daylight, Alexandrite appears a vivid bluish green. Under incandescent light, it shifts to deep purplish red. According to GIA research, fewer than 1% of all gem-quality chrysoberyl ever mined exhibits this transformation so vividly, a property that elevates Alexandrite into one of the rarest gemstones on Earth. Historically, Alexandrite's discovery coincided with Russia's imperial expansion under Tsar Alexander II, for whom the gem was named. Its natural green and red hues, mirroring the colors of the Russian military flag, made it an emblem of aristocracy and loyalty to the empire. But the Ural deposits were nearly depleted by the late 19th century, forcing the trade to shift towards secondary sources in Sri Lanka, Brazil, and Madagascar. While these localities sustain a limited supply, their stones rarely match the clarity and saturation of Russian material. As a result, high-quality Ural-origin Alexandrite is now considered museum-grade, frequently commanding prices at or above the world's finest rubies and sapphires. In 2025, commercial Alexandrite between 1 and 2 carats trades from $8,000 to $15,000 per carat, but the value curve rises steeply with size, clarity, and color performance. Stones above 3 carats showing over 90% color change fetch $25,000 to $45,000 per carat, while Ural-origin Alexandrites over 5 carats are valued between $70,000 and $120,000 per carat. Elite collectors and institutional buyers increasingly drive the investment market. At Christie's Geneva 2024, a 17.08 carat Alexandrite from Ural achieved a record-breaking $1.23 million US. With production from all known deposits declining and demand for high-performance stones surging, Gemfield's Market Outlook projects annual growth of 13 to 17% through 2030, outpacing conservative gold forecasts. In today's market, Alexandrite stands at the intersection of scientific rarity, historical prestige, and constrained global supply. For investors seeking assets where value is driven as much by physics as by scarcity, Alexandrite offers a compelling case to outperform gold within the next 5 years. Ranked 6th, Cobalt Blue Spinel, Asia's new auction powerhouse. Momentum can transform an overlooked gem into a global investment asset almost overnight, and few examples illustrate this better than Cobalt Blue Spinel. For decades, Spinel was overshadowed by ruby and sapphire, despite sharing similar geological origins. That changed dramatically after the Gemological Institute of America, GIA, formally recognized cobalt-rich spinel as a distinct classification in 2019. The recognition triggered a surge in international demand, propelling this once modest stone into the spotlight of high-value auctions and private wealth portfolios. Geologically, cobalt spinel derives its signature electric blue hue from trace amounts of cobalt within its crystal lattice, a rarity requiring particular geochemical conditions. Only a handful of localities produce investment-grade material, primarily Luc Yen in Vietnam, Sri Lanka, and Madagascar. Among them, Luc Yen has emerged as the benchmark source, delivering stones with superior saturation, clarity, and fluorescence unmatched by other deposits. According to GIA, less than 5% of spinel mined globally qualifies as genuine cobalt spinel, underscoring its scarcity. Market data from 2025 highlights how rapidly valuations have shifted. Commercial stones between 1 and 2 carats now trade from $6,000 to $12,000 per carat, while premium 3 to 5 carat gems showing neon cobalt hues achieve $18,000 to $25,000 per carat. At Sotheby's Hong Kong in 2023, a 7.28 carat cobalt spinel from Luc Yen sold for $276,000 US dollars, nearly $37,900 per carat, setting a record for the species. Industry analysts attribute this rapid appreciation to escalating competition from Asia-Pacific markets, where private collectors and institutional buyers increasingly seek ultra-rare colored stones as alternative wealth assets. Looking ahead, the outlook remains robust. Gemfield's Market Outlook 2025 forecasts annual growth of 15 to 20% for cobalt spinel prices through 2030, driven by diminishing production at existing mines and sustained demand from China, Singapore, and Japan. With limited supply, a growing collector base, and repeated record-breaking auction results, cobalt blue spinel has transitioned from an underappreciated gem into a rising powerhouse. For investors navigating the next decade, it represents a rare convergence of geological scarcity and financial opportunity, positioning it to outperform gold by a wide margin before 2030. Ranked 5th, Mahenge Spinel, the neon gem that sparked a global bidding war. Some gemstones define markets, others create them. Mahenge Spinel, discovered in 2007 in a remote region of Tanzania, did both. Within months of its debut on the international stage, its neon pink brilliance captured the attention of collectors, luxury houses, and auction houses worldwide. What sets Mahenge apart is its unmatched electric pink saturation, a product of unique geochemical conditions that occur in only a few square kilometers of East African terrain. According to GIA research, fewer than 3% of spinel globally exhibit fluorescence this intense, placing Mahenge specimens among the rarest and most visually striking stones on Earth. The turning point came in 2008, when a 52.76 carat Mahenge spinel stunned bidders at Sotheby's Geneva, achieving 1.47 million USD and establishing a new global benchmark for colored spinel. This sale triggered a cascade effect. Jewelers such as Cartier and Van Cleef and Opal began acquiring Mahenge spinel for limited edition designs, while private collectors shifted focus toward neon pink investment-grade stones. The result was a rapid revaluation of the entire spinel category, previously overlooked by mainstream investors. By 2025, Mahenge spinel will continue to command premium valuations. Stones between 1 and 2 carats trade from $5,000 to $9,000 per carat, while top-tier 3 to 5 carat gems with full hot pink saturation achieve $12,000 to $18,000 per carat. Exceptional stones exceeding 5 carats, with flawless clarity and vivid fluorescence, now reach $20,000 to $30,000 per carat. Sotheby's Hong Kong 2023 reported a 17.85 carat Mahenge spinel, selling for $486,000 USD, averaging $27,200 per carat, underscoring sustained demand among Asia-Pacific buyers. Growth projections remain strong. Reports from Gemfield's Market Outlook 2025 estimate a 14 to 18% compound annual growth rate for Mahenge Spinel through 2030, supported by shrinking production, intensifying competition, and the rise of private auction platforms across Asia and Europe. For institutional investors and high-net-worth collectors, Mahenge Spinel represents a rare convergence of geological exclusivity, market-driven scarcity, and accelerating global demand, positioning it as one of the clearest candidates to outperform gold within the next 5 years. Ranked fourth, Paraíba Tourmaline, the neon treasure-setting auction records. Some gemstones captivate, few ignite global markets. Paraíba Tourmaline, first discovered in 1989 in Brazil's Paraíba state, belongs to the latter. Its neon blue glow, caused by unusually high concentrations of copper within its crystal lattice, gives the impression of light radiating from inside the stone. According to GIA, fewer than 1% of tourmalines worldwide exhibit this intense glowing phenomenon, making Paraíba a scientifically unique and visually unmistakable gem. The early 1990s marked the beginning of what collectors now call the Paraíba effect. At the 1990 Tucson Gem Show, initial stones achieved unprecedented prices of $2,000 per carat, a breakthrough that rewrote expectations for tourmaline's market position. By the early 2000s, Tiffany & Co.'s limited edition jewelry collections elevated Paraíba's profile further, introducing it to elite buyers in the US and Asia. Japan emerged as the single largest consumer market, creating fierce competition for stones under 2 carats with flawless neon saturation, a demand dynamic that continues today. In 2025, Brazilian-origin Paraíba between 1 and 2 carats commands $15,000 to $25,000 per carat, with Mozambique-origin stones of comparable neon quality trading at $8,000 to $16,000 per carat. Exceptional specimens above 5 carats now achieve $25,000 to $40,000 per carat, with Sotheby's Hong Kong recording a 7.52-carat Paraíba from Brazil selling for $1.05 million US dollars, approximately $139,600 per carat in 2023, a historic record that underscores its elite positioning among investment-grade gems. Looking ahead, Gemfield's Market Outlook 2025 projects Paraíba prices to grow at a compound annual rate of 16 to 20% through 2030, significantly outpacing gold's forecasted 5 to 7% KGR. With Brazilian deposits largely exhausted, Mozambique tightening export controls, and rising demand from Japan, the US, and China, Paraíba is becoming one of the most strategically sought-after colored gemstones in the world. For investors seeking high liquidity, certification-backed assets, Paraíba offers a rare balance between natural scarcity and measurable market demand, positioning it as a strong contender to outperform gold within the next 5 years. Ranked third, Emerald, the untreated green legacy reshaping global wealth. Emeralds occupy a space where geology, history, and wealth intersect. Among all sources, 2 regions dominate conversations around investment-grade stones: Colombia's Muzo and Chivor mines, and Pakistan's Swat Valley. These deposits produce emeralds of extraordinary clarity and saturation, shaped by highly unusual geological conditions. Barrels infused with trace amounts of chromium and vanadium under extreme tectonic pressure. According to GIA data, fewer than 5% of emeralds mined worldwide remain untreated, placing them among the scarcest colored gemstones available today. The story of emeralds stretches back more than 1,500 years. Indigenous Muisca communities in Colombia extracted these green crystals long before the arrival of Spanish explorers in the 16th century, who introduced them to European courts and global trade. By the 17th century, emeralds adorned Mughal emperors, Russian czars, and European royalty, becoming synonymous with status and sovereignty. In the modern era, houses like Cartier, Harry Winston, and Van Cleef & Arpels cemented emerald's position at the pinnacle of high jewelry, sourcing exclusively from Colombia's fabled mines. In today's market, untreated Colombian emeralds command substantial premiums. Stones between 1 and 2 carats sell for $8,000 to $12,000 per carat, while 3 to 5 carat gems reach $18,000 to $30,000 per carat. Exceptional pieces above 5 carats, exhibiting vivid muzo green saturation and near-flawless clarity, achieve prices of $40,000 to $70,000 per carat. In 2024, Christie's Geneva auctioned a 12.03-carat untreated Colombian emerald for 2.13 million USD, setting a benchmark of 177,000 per carat. SWAT emeralds, celebrated for their exceptional depth of color, are increasingly coveted among Asian collectors, with stones above 3 carats achieving $12,000 to $20,000 per carat. According to Gemfield's Market Outlook 2025, prices for untreated emeralds are projected to grow at 15 to 19% annually through 2030, well above the conservative 5 to 7% KGR forecast for gold. With Colombia's production declining, SWAT's output tightly controlled, and institutional interest accelerating, untreated emeralds are no longer viewed purely as jewelry assets. They now function as heritage-tier financial instruments, combining measurable scarcity, centuries of cultural significance, and expanding global demand. For investors seeking rare, verifiable stores of value, untreated emeralds stand among the strongest candidates to outperform gold within the next 5 years. Ranked second, Sapphire, the royal blue legacy outperforming gold. Some gemstones rise in value, a few transcend time itself. Among them, Kashmir and Burmese sapphires occupy an elite tier, uniting geological rarity, royal heritage, and enduring investment value. Formed under extreme tectonic pressure, these sapphires derive their distinctive hues from trace amounts of iron and titanium, creating the legendary velvety blue of Kashmir and the vivid royal blue of Burmese mogok stones. According to GIA, fewer than 2% of all sapphires on the market today remain unheated, placing them among the rarest investment-grade colored gemstones available. Discovered in 1881, the Kashmir deposits produce stones so soft and saturated in color that jewelers called them blue velvet trapped in crystal. But by the mid-20th century, these mines were largely exhausted, making Kashmiri stones among the most tightly held assets in the gem trade. Burmese mogok sapphires, meanwhile, carved their place in history through royal collections across Europe and Asia, adorning imperial regalia and limited edition jewelry from houses like Cartier and Boucheron. In 2025, unheated Kashmir sapphires between 1 and 2 carats sell for $25,000 to $40,000 per carat, with 3 to 5 carat gems achieving $60,000 to $120,000 per carat. Exceptional stones above 5 carats, exhibiting full velvet blue saturation and flawless clarity, now command $150,000 to $250,000 per carat. Burmese unheated sapphires, celebrated for their vivid royal hues, trade between $12,000 and $20,000 per carat for smaller sizes, and $35,000 to $65,000 per carat for 3 to 5 carat gems. At Sotheby's Geneva 2023, a 15.88 carat unheated Kashmir sapphire set a new benchmark at 3.88 million USD, averaging $244,000 per carat, underscoring the segment's dominance in global auctions. Gemfield's Market Outlook 2025 forecasts annual growth of 16 to 22% for unheated Kashmir and Burmese sapphires through 2030, compared to gold's projected 5 to 7% CAGR. With production from historical mines nearly depleted, institutional demand accelerating, and certification standards strengthening global liquidity, these stones are evolving from royal heirlooms into heritage-grade financial assets. For high-net-worth investors seeking historically proven scarcity with measurable price appreciation, unheated sapphires stand as one of the clearest pathways to outperform gold within the next 5 years. In first place, Pigeon-Blood Ruby, the king of gems dominating global wealth. At the very top of the global gemstone hierarchy sits a single benchmark of rarity and prestige, the Pigeon-Blood Ruby. Defined by its luminous, deeply saturated red, subtly balanced with undertones of blue, This classification represents less than 1% of all gem-quality rubies worldwide. According to the Gemological Institute of America, GIA, and SSEF, achieving this designation requires a precise combination of chromium concentration, crystal clarity, and refractive behavior rarely found in nature. Among the few localities capable of producing such material, Mogok, Myanmar, remains the legendary source, while modern discoveries in Mozambique have reshaped supply dynamics without diminishing demand. Throughout history, these rubies have been symbols of sovereignty and divine power. Burmese Mogok stones adorned imperial crowns in Southeast Asia, Mughal ceremonial armor, and European regalia alike. In royal archives, rubies were described not as accessories but as instruments of rule, sought by emperors, monarchs, and collectors for over 1,000 years. Even today, this narrative persists. In private wealth portfolios and auction rooms, Pigeon-Blood rubies represent the highest tier of ownership, transcending jewelry to function as enduring stores of value. In 2025, unheated Burmese Pigeon-Blood rubies between 1 and 2 carats trade for $25,000 to $50,000 per carat, while top-tier 3 to 5 carat stones reach $80,000 to $150,000 per carat. Rare gems exceeding 5 carats, combining flawless clarity and vivid saturation, command $200,000 to $450,000 per carat. Mozambique origin rubies, celebrated for comparable hue intensity, sell between $8,000 and $15,000 per carat for smaller stones and $25,000 to $45,000 per carat for larger sizes. At the very top end, record-breaking auctions underscore market appetite. The 25.59 carat Sunrise Ruby, an unheated Burmese masterpiece, achieved $30.3 million at Sotheby's Geneva, setting a historic benchmark of $1.18 million per carat. In 2023, a 10.05 carat Mozambique ruby sold for $8.4 million at Christie's Hong Kong, reflecting the acceleration of global competition. Analysts at Gemfield's Market Outlook 2025 project a compound annual growth rate of 18 to 22% for Pigeon-Blood rubies through 2030, comfortably exceeding conservative gold forecasts of 5 to 7% CAGR. With Burmese deposits nearly exhausted, Mozambique enforcing stricter extraction quotas, and institutional buyers from the U.S., Singapore, and the Middle East intensifying their positions, unheated Pigeon-Blood rubies are evolving from cultural icons into heritage-tier financial assets. Among all colored gemstones, they offer one of the clearest cases for outperforming gold over the next 5 years. By 2030, the balance of wealth could look very different. Gold will remain a universal standard, but these 10 gemstones represent a new tier of scarcity. Assets verified, tracked, and traded in markets once hidden from public view. From discreet private sales in Geneva to record-setting auctions in Hong Kong, demand is consolidating among collectors and funds who view these stones not as jewelry, but as heritage-grade stores of value. The next decade won't just measure carats or clarity, it will measure access. Because while anyone can buy gold, ownership of the rarest gemstones is already becoming invitation-only, and this is only the beginning. In the next episode, we explore how private vaults are reshaping the future of global wealth.